Hello there, welcome to the week ahead here on IG as we wrap up the post-Easter four-day week here in London. The first day of the first quarter saw oil prices fall below $40 a barrel after Saudi Arabia said it would freeze production only if other major producers did the same. Tough week for Japanese manufacturing data, surprisingly positive data for China. Britain welcomed the minimum wage. Janet Yellen boosted the market earlier on in the week with a cautious tone. And non-farm payrolls were better than expected with 215,000 jobs added, unemployment at 5% and a wage increase of 0.3%. So it was busy. Let's now turn our attentions to what awaits us next week. We'll have a look at the economic data for you, kicking off with Monday. And as you can see just there, it is a lot. We've got a plethora. We kick off with Australia, retail sales, unemployment, Spain unemployment as well, consumer confidence from them too, PMI from the UK, US factory orders, US labour market conditions, and finally Eurozone PPI. On Tuesday, it's slightly quieter. We've got Japan PMI coming out. We've got, again, a whole host of Eurozone data to come, and the RBA, which is what we're going to analyse in just a minute or two. On Wednesday, again, we've got China services PMI to come. So lots of PMI data in the week. Germany industrial production, UK house prices, and again, retail PMI though for the Eurozone to come, and the EIA crude oil stocks change. On Thursday, it's France's trade balance, Spain industrial production. We've got US jobs data coming as well, US initial jobless claims. And to finish off the week then, there we are. We've got Japan, Germany, UK trade balance, France industrial output, UK MFG production, UK industrial production, Canada unemployment rate, and UK GDP data as well. So in terms of economic data, it's actually rather busy indeed. We've got Chris Beauchamp right here to analyse what exactly to look out for. Chris, let's just rewind to Monday. We've got UK services PMI to come. What exactly are you expecting from this one?
Well, we're expected to see not too much of a change really in services data. Remember, this is the key PMI reading for the UK economy because service is the most important element of the UK economy, unlike manufacturing and construction, which are far smaller. So we're wondering to see whether we're seeing any sort of decent improvement within the UK economy overall. And so if we're watching this, I think we're keeping an eye on what happens to the pound against the US dollar. Now, certainly the last couple of days have seen quite the turnaround on what has been a fairly strong trend in the pound against the US dollar. And actually, if we look at the chart, you can see we are now back at 142 versus the US dollar. That's sort of unwinding from 200 points higher than we were just a couple of days ago. And I think the worry is now that we'll get continued weakness here because of that non-farm payrolls reading today in the US, which has given the US dollar a bit of a boost. We also have construction PMI from the UK in the week as well, and that GDP estimate on Friday. The big question, though, is really, is the UK economy heading in the right direction? And also, just to cap it off as well, UK trade balance figures right at the end of the week. And we had a very big current account deficit for the overall economy this week, very much a concern. But the point is that maybe continue to be an exporting nation, Britain is seeing a fairly decent trade deficit, and that is at least helping the economy. So if you get a weaker pound, that will serve to boost exports overall. But for services PMI, this is a big number of the week, I think, and so we're watching it maybe heading back towards the lows of what we saw in March, which is close towards the 140 level, and potentially as far as maybe 138 over the longer term.
All right, thanks, Chris, for that. That's the UK PMI data. But we also want to go down under and talk about a certain rate decision that's happening on Tuesday. It's the RBA decision. Will they hold rates or not? Chris, what do you think?
It's expected to leave rates unchanged at 2%. There are a few economists that do think they might actually cut rates in response to some more difficult monetary conditions in Australia. Remember, of course, they're tied very closely to what happens in China. Crucially, of course, the Chinese economy, very important for Australian mining industries, and also a number of other products coming through there. If you get improvement in the Chinese economy, which we are seeing at the moment, the stimulus measures do seem to be bearing fruit, then that arguably makes life easier for the RBA. But they are probably going to be fairly dovish on the outlook, really, which could mean that you get a further unwinding of this particular currency pair. You've seen the Aussie dollar rallying strongly against the US dollar since the middle of January, a very strong trend. But the risk is now that we start to go back to that rising trend line you can see there, and that would take us down towards the 74 level. And if they cut rates, that would certainly be the surprise. That would push us lower. If they're fairly cautious on the economic outlook, that would push us lower as well. And again, it's all about these non-farm payrolls and what we think the US economy will do, and and that's looking a bit better, which is pushing people back to the US dollar, which is probably going to bring the Aussie dollar back down again. So we tried to get through 77 cents this week. We didn't succeed, and so I think we could just see that loss of momentum accelerate to the downside, down towards 75 if it continues down towards that rising trend line.
All right, Chris, thanks. Let's talk about company data that we're expecting. And actually on Monday, we're not expecting anything. So we're going to kickstart with Tuesday, if we can. On Tuesday, we have British Car Rescue Service AA. We also have Cranswick as well, Britain's largest sausage maker. We've also got menswear producer as well, Moss Bros, iron ore company, Ferrex Poe, electro components as well, Tate & Lyle and Card Factory. Now, investors are hoping that UK-based multinational Tate & Lyle will deliver a more upbeat trading update after February's trading statement warned that weaker emerging market currencies would negatively impact full-year earnings, sending the company's shares tumbling. And finally, we've also got American pharmaceutical company as well, which operates the largest drug retailing chain in the United States. It's Walgreen Boots Alliance. Wednesday, it's the UK's biggest tile and wood flooring specialist, Top Tiles. We've got UK Mail Group, HSS Hire Group, fashion retailer H&M, and US agriculture giant Monsanto. Thursday, we have the UK's #1 homewares retailer, Dunelm Group. We've also got Marks & Spencer's. We're going to talk about that in just a second. Gold mining company Sentiment as well. Alliance Pharma, Flybe Group, and Rock Hopper Exploration as well. So it's a busy week, but it's just a 3-day one in terms of corporate data. But right now we're going to focus our attentions on Marks & Spencer. Well, it's a little bit in trouble, isn't it? Because as I understand it, it's the non-food sector that is in trouble as far as Marks & Spencer are concerned. And also it's the competitors in women's wear.
Marks & Spencer has been in deep trouble for quite a while now, really. It's been the food division that's been powering earnings growth, and that faltered a few months ago, but that seems to have recovered, but they are continuing to lose market share. And we did see the share price fall to its lowest level since October of 2014. This is a longer term chart. You can see that we were down at £3.80 in October of 2014, and we're now not too far away from that at all, really. The share price has only really recovered slightly from its lows just 2 or 3 days ago, and actually the trend for 2016 has been down, whereas if you look at the broader market, we've rallied considerably. This trading statement from Marks comes, of course, on the heels of next abysmal full-year earnings when the share price dropped 15%. And the worry from the brokers like Merrill Lynch at the moment is that Marks's share price is still too high, that if you like, it's pricing in too much good news, and that if we have a sort of trading statement that says sales continue to decline, we keep seeing a loss of market share, we keep seeing crucially women's wear, one of the key ones for Marks, actually beginning to decline, then you'll see a big correction in their share price. So we're watching that £3.80 level. If that goes, it's a bit of a look out below moment. However, again, as with all these things, trading statements, sometimes they can be a lot more volatile than these full-year earnings. And so if they do try and put a positive spin on it, if they can even improve market share, which seems unlikely, but if they can do that, you might see the shares start to recover. Nonetheless, the future does look a bit bleak for M&S, and you've had those troubles with BHS as well on the high street. So overall, retail doesn't look like the best place to be, particularly if, as we head into the rest of April, the broader market starts to suffer.
All right, well, that's happening on Thursdays. That's one that we are watching. That's Marks & Spencer's for you in terms of corporate data. So that is it. That is the week ahead. We are indeed in April officially now. So let's hope spring joins us at some point, and have a great weekend. And we look forward to seeing you again on Monday.